Niku, and I'm going to be with you today. We're going to be discussing a very interesting topic, I think, um, how to create your own strategy. And while we're doing that, we're going to also be doing some live trading, and we'll discuss it as we go. Right, so also stick around. We'll have a promo code for you later. It's a good one today. So let's get to the charts. Okay, so I've spoken to a lot of people in the past regarding uh, trading strategies, and there's two things that keeps repeating themselves. Whenever I ask somebody what strategy they use, I will get answers like something like I use the RSI or I use the stochastic, which is not a strategy. And the second thing that I get asked mostly is people want to know, how do I control my emotions, how to keep calm while you're trading, and how to keep the emotions out of it. And this is also related to strategy, and we're going to discuss that now. So the importance of having a clearly defined set of rules when you trade is, number one, it will remove all emotions from your trading. The strategies that I use have very clearly defined rules. I don't have to worry when I get an entry. I don't get excited, or I don't worry whether I'm going to win the trade or lose the trade. I know that I sometimes lose trades, but I do know that my strategies are tested. I can use them with confidence. As long as I stick to the rules, I do not have to worry. I do not have to get excited. So that's number one. The second part of having a very, very clearly defined strategy is that it is very easy then to gauge its performance. I keep track of every single trade that I do. It goes into a spreadsheet, and I have a look at it regularly on the averages, monthlies, and weeklies, and so forth. If you do not have a very clear set of rules, that data gets tainted, and you do not know if the strategy that you are using is performing well or not performing well. So we're going to look at steps today on how you can create your very own trading strategy, and then I'm going to also cover the ones I'm looking at, and we're going to take some trades. So let's see, guys. Also, if you have any questions, please drop them in the comment box there, in the chat box. I'll answer them as we go along. Let's see. Somebody asked about the PPI. Please excuse me if I'm pronouncing this wrong. Abdul Salil asking about the PPI coming up. That's going to be in 90 minutes from now. So this will not affect what we're going to be discussing. It's not going to be affecting my trading, any trades we might take, since that it's 90 minutes from now only, and the US session only begins in an hour, so it's not going to influence us that much. Also asking what I expect. It's really impossible to tell what will happen. I see that the forecasts are that the PPI will be a bit lower, and we'll just have to see what happens. But there's no way to really tell, unfortunately. Okay, and hi Alex, and Henny, welcome to you as well. Right, let's get to it. How do we start to create our own trading strategy, and where do we begin, and how do we implement it? The first thing we need to do is set our goals. What do I want to accomplish? These are also long and short-term goals. Short-term goals, for example, will be that how much time do I have every day to sit in front of the charts? So that will determine, can I take a strategy that's I'm sorry, I'm struggling with the term here, but let's say it's a slower strategy, or do I need something that's fast and will give me maybe a bit more entries with a little bit lower win rate? Usually those will balance out. So the slower your strategy, usually the better the results will be. So you need to assess that, decide that for yourself. Long-term goals will be, for example, that I want to be able to have a consistent income on the side over the next few months. But you need to go and sit down and really think about what it is you want to accomplish. The second thing you need to understand or be aware of before you even start building a strategy is what your risk tolerance will be. If you are able, let's say, I've got a very small amount of capital that I can play with. I cannot, for example, build a strategy around a martingale system because the risk on that will be too great. If I might wipe my balance if something goes wrong, if I don't have a lot of tolerance there. Whereas if I have a fairly decent amount of capital, I can do small trades, bring my trade size down, and then I can use a martingale strategy. So that's also something you need to decide and be aware of before you actually start putting everything together. So next thing we're going to look at, once you've set your goals and once you've decided what your risk tolerance is going to be, then we go and we look at indicators, and there's 5 different types. Most people will tell you 4, but there's 5. We have, for example, trend indicators. Trend indicators will be your moving averages, your MACD, parabolic. Those are trend indicators. We have momentum. Momentum will be indicators like the stochastic, the CCI, the RSI. These show you momentum. We've got volatility. Those will be indicators like Bollinger Bands and ATR. And we've got volume. And the first one would be technical drawings. This will be if you draw trend lines into your chart, if you use Fibonacci, any drawings that goes onto your chart is also technically considered an indicator. And there's a pool of 5 types of indicators that you can choose from. Not everybody will understand the same type of or not everybody will understand all the different types of indicators. I have a friend, for example, he's very good with trend and momentum, but volatility, he really struggles with any volatility indicators. He really struggles to use them. So you need to go and sit down, look through everything. Not look through everything, but you have to get a feel for what type of trading you want to do. Test them. Very important that if you want to use, for example, a stochastic oscillator, you do need to go do some research and just have a look at what it actually shows you. You need to understand what this indicator is showing you, otherwise you won't really be able to use it anyway. You really need to understand this. And from there, you're going to look at putting together 1 or 2 indicators, maybe 3, and then bringing them together into something that you understand, so that the chart is no longer just random up and down candles, but that you are actually extrapolating data from it as you are watching it. Right. Once you've decided which indicators you want to use and which ones you understand and which ones you are comfortable with, you start looking for patterns in those indicators. You're looking for patterns that goes along with price movement, patterns that coincides with other indicators that you might have on your charts. And then you need to test these. So once you come up with an idea for a strategy, you need to test this before you do anything with it. And there are 2 ways of testing strategies. Number 1 is back testing. The advantage of back testing would be that we don't have to spend a lot of time. We can just start scrolling on the chart, look for instances where the strategy that the rules we've set out for the strategy is allowing us to take trades, and we can rather quickly journal those and get an idea of how effective the strategy is. The downside of doing backtesting, though, is that you do not know if you are able to identify these trades live while they are happening. So that brings a challenge on its own. The second way of testing it is then is exactly the opposite. You go on a demo account and you use your strategy live, and then you see if you can spot when the conditions are met, and that you're not late. So then you practice taking your entries on the conditions you set out to this for the strategy, um, so you can get a feel for it and you get comfortable with it, comfortable taking your trades. Okay, so and then common mistakes we need to avoid when we're doing when we're using our strategies is over trading. I use three core strategies. There's three strategies that I mostly use during the day, and on average I get about one trade every 10 minutes. That's good days, that's decent days. For example, we had Monday, Tuesday, and Wednesday this week. I was running roughly about one trade every 10 minutes. And yesterday, the market simply didn't give me any trades. I was getting an entry maybe every half hour. So over trading, if you have your predefined rules and conditions for entries on your strategy, you do need to stick to them. You stick to them no matter what. We're not going to trade more than we need to. We're going to wait for our entries and our strategy because we've tested it, we know it works, and then we're just going to stick to it. And also, that way it will take out the emotions for us. We won't get excited over trades. We won't start stressing if we lose a trade, which is also really super important. A big cause of overtrading is people get emotional and they maybe lost a trade or two in a row, or maybe three or four, and they start getting super emotional and they start making a lot of mistakes. Another thing we need to stick to is our risk management. Once you've decided on the risk management that fits the strategy, we will stick to you have to stick to it. We're not going to change it. If I lose a trade, I'm not going to next trade suddenly double or triple the trade size. I'm going to stick to my management plan, because it's in line with the strategy, and I know that if I don't change it, it will be fine. And test those strategies. A lot of people skip it because it is a lot of work. It does take up quite some time to test strategies, be it either backtesting or live on a demo account. Either way, it's going to take some time, and be prepared for that. It's something we can't get out of because we need the data, and I cannot build a strategy, for example, and say, I saw 5 entries. This looks like it's a good strategy, and I'm going, so I'm going to use this. Today the market's going to be one way, tomorrow the market's going to be other way, and your strategy will not perform the same every day. It's no strategy does. So you need to have an extensive period of time to actually backtest, either backtest or trade it for a few weeks on demo, to see how it's performing. And you really need to keep a journal of this. We tend to remember the good things, and we tend to kind of forget bad things. If it's not super traumatic, our brain just pushes away tends to prioritize good things, because we get a dopamine hit when we win. It's just one of those things, and the bad trade doesn't give it to us. So we're gonna, if you do not keep journal, you're gonna have a misconception of how well this strategy is performing, and later down the line you're not going to understand why I'm losing money. Right, so please stick to that, and yeah. Those are the steps in creating your own strategy. It is a lot of work, but it is crucial to trading. It's absolutely crucial that you have a strategy that is really, really well defined, rules that are set, and that you do not trade off feelings or something you think might happen. I cannot begin to tell you how many times I've looked at a chart and I thought, I think this is going to happen now. And it doesn't, and completely the opposite. So it's not, we can't predict the market, but we can follow it, and we can build strategies around this. Okay, so as I said earlier, 3 strategies. 2 of these strategies are, or the two strategies that I use every day is divergence, and I use the ADX strategy. Both these strategies I discussed in previous videos. Yeah, on pocket option, you guys can just scroll back or go back to the recent live streams. I did a video on divergence, and I did a video on the ADX. We did some trades as well. So those are 2 that I use. And my third strategy that I use is an RSI strategy, where I look for areas where the trend is really strong, where price is moving strongly in one direction, be it up or down. So when we actually had 2 beautiful trades earlier. Let me just see if I can. Oh no, it is off. Let me see if I can get those. It was, where are we? What's the time? It was earlier. So these are the way I look at I trade these is I've got a strong uptrend here. I look at my ADX. My ADX shows me the strength of the trend. Remember, it's never direction, it's showing you the strength of the trend. And the strategy is this, and it's very simple. I use the RSI middle line, and if price is trending upwards, we're going to see the RSI moving obviously above the middle line. But there will be cases where price will come down and hit my moving averages. These are, by the way, 50, 100, and the 200 moving average. So price comes down. When price does come down, and we have an instance here where the RSI came down and just tapped the middle line there and it got rejected, that would be a buy trade for me. So you can see we had a trade here, we had a trade here, and these will all be 1-minute trades, but it has to be on or really, really close. Right. So this, for example, is not a trade for me. We had RSI almost hitting there, and this one as well. This was not a trade for me. I didn't take this because my price wasn't at the wasn't on or super, super close to the moving average there. So I have a strategy that has clearly defined rules, and I will only take trades whenever my rules are met. Here was another one. Rules are met for this. So as soon as we saw the rejection, it was a buy trade. Exact opposite for when price is trending down. Let's see if we can find some examples. Market was super choppy the last hour or so, though. Not quite. There's an example of we were moving downwards. My ADX was climbing, so it's showing me it's on almost on 30 there, showing me that the strength is relatively strong. So I can look for pullbacks like this, where my RSI taps the middle line and gets rejected. Okay, so this will not be a trade for me because this is way too far from any of my moving averages. Any questions so far? Anybody got a question? Anything unclear? Nope. Okay. So let's look for trades. I think we covered, I hope everybody has an understanding of the process of creating a strategy. Like I said, it is a lot of research. It is a lot of work. It is a lot of testing. but this is for yourself. And we cannot be successful if we don't put in the work. Okay. So while we are waiting for a nice setup, guys, there's the promo code you guys can use. Nico70 will give you a 70% deposit bonus. Hope you guys make good use of it. Let's see, we might actually have a trade here. This will be a good example of hidden bearish divergence. So we are in a downwards movement. My price is making a lower high from the previous one, but my oscillator is making a higher high. So I'm just going to wait and see if this thing opens up. It's right below the moving average as well, which is great for me, always a great sign. But my oscillator isn't opening up, so I do not have downwards movement yet. And according to my strategy, I'm not allowed to take a trade. Although I do have hidden divergence, hidden bearish divergence, I am not allowed to take a trade because my because the stochastic hasn't started opening up to the bottom for me, and it's going to keep me out of trouble. Just like that. So if I was a bit hasty, as you guys can see, I do 1 minute expiry trades. If I rushed this, there was a good chance that I could have lost this trade on this drop here. And that is exactly why we need to have clear rules, and you have to have a really good understanding of what it is that you're using, what your indicators are showing you. The market is telling you what it's doing. It's always telling you what it's doing, and there's so many different ways that it is telling you. We just need to wait and watch and see what it's telling us. Hi, Amarjeet. I see you from India. Welcome. I'm from South Africa, and it's already hot, and the summer hasn't even started yet. At the end of the day, we did get rejection there. But I did stay out of it because my strategy didn't allow me to take a trade. I have, like I said, I've got my rules are set for my strategies. And if the conditions aren't met, I simply don't take a trade. We do need to be patient. Some days you will sit for half an hour and nothing is happening. I always recommend people just go do something else while they're busy doing it. That's what I do. If the market is frustrating me, if I'm not getting entries, and it does happen, when I get frustrated, I just leave, go do something else, come back later, see if the conditions have changed. Okay, so yeah, guys, please, if there's any questions, anything that's unclear, please go for it. The only bad question is the one that's not asked. Okay, so we might get a trade entry here. Let's see. We are in a downwards movement. The fact that we're making higher lows, though, is I'm not too fond of it, because when we start making higher lows, it's usually an indication that the trend is changing. Let's take a sell. Oops, too late. This is the reason you have to stick to your strategy. This is a beautiful example. of missing trades if you're not if you start doubting your strategy. And it happens to all of us. Some days we are a bit skittish, and we need to trust the strategies we have. This was a sell trade. According to my strategy, we are in a downwards movement. The ADX is picking up, and this should have been a sell. It would have been a good one as well. But this is something that happens to everybody. Some days you are a bit skittish, and it's just the way it goes. How to trade in manipulate. I'm not sure what you mean, Aminur, about manipulation. If you could maybe expand on that for me, I really don't understand what you mean that. Gilbert is asking, how do we deal with emotions while trading? Gilbert, I mentioned earlier at the beginning of the video, if you need to have a very, very clearly defined trading strategy with clearly defined rules for entry trades, for taking trades. You must have a very, very clearly defined trading strategy. If you don't, you're going to be taking trades basically randomly, and then you're gonna go into a streak where you start losing a bunch of trades, and that's going to add to your emotions, and you're going to get excited, and you're going to get anxious, and you're going to start over trading, and you're going to start making bad decisions, and you're going to start taking bigger trades. Whereas if you have a very clearly defined trading strategy that you know works, that you've back tested, and you've tested on a demo account, and you're comfortable with that strategy, and you've got the data that shows you the strategy has an overall decent win rate, when in that case you're going to be taking trades, you're going to know you're going to lose a few trades, but it's not going to matter to you. You're not going to get excited if you lose a trade, because you know that you followed the rules of your trading strategy, and losses do happen, but the next few will be winners, or the next one or two will at least be good trades, because we know that doesn't matter what strategy you're using, they will be losing trades. Question is just how many. So yeah, that's the only way that I can that's the only way to keep emotions out of trading. It needs to be mechanical, but you cannot have a mechanical trading system if you don't have a trigger for that mechanical system, and those rules are the trigger. It needs to be clearly defined rules, nothing else. That's the only way you're going to keep emotions out of trading. Antoine is asking why I don't switch to other currency pairs, searching for opportunities. Happy to do so. But personally, for me, I kind of always stick to euro. I just kind of always stick to euro. So often it's happened that I'm jumping between currencies, and when I get back to one that I was on, I missed a very good trade opportunity. So for me, it's not about taking trades that much as getting it right. For me, it's more important to get my win rate, to keep my win rate high. So a lot of times also, if when I am switching charts, I found that I will switch to something and think I see something, and then take a trade, and then I realize I messed up. It wasn't actually a valid entry, but I was in a rush because for a second it looked like something I should be trading. So, but that's me. A lot of people do not struggle with that. I do. So I have to adapt my my trading to something that I can actually handle. But let's see if we can actually find a decent trade somewhere. We got this coming up. No divergence forming. This is actually not a real strong push anyway. Let's see if Euro JPY has something for us. No divergence. No strong trend. RSI is through, so we're not getting something on the RSI strat. Let's go back to Euro, see if there's something. Nope. The key to this though is it doesn't matter how much. I would really love to show you guys 20 trades when I'm doing a stream like this. I would love to, but I cannot take trades that the market doesn't give me. That's it. And again, like I said, some days are going to be, your entries are going to be flowing. Some days it's not. And there's nothing we can do about that. The second you start forcing your trades, you're going to start losing your trades. The second you do that, we cannot do that. I have my strategy and I have to stick to it. That's it. Okay, so Aminur, you're asking about verification. I can't answer you on that at all. That's something you'll have to take up with support, man. I do not have any connection with those things. Okay, we might get an entry here. I need you to go up. I need you to go up. We've got the RSI here. We're in an upwards move. ADX is climbing. But this broke through. Let me just see if it gets rejected or not. If it does, I'll take a buy, but if it doesn't, it does look like it might. New candle. Not quite. On the other hand, we do have bullish divergence forming. So this is hidden bullish divergence as well. We've got the low here and a higher low here, while my oscillator was making a lower low. And the RSI is not that hot for me, but this divergence also happened right on the moving average. So this is the kind of things I'm looking for when I'm taking trades. This is 100% in line with my trading strategy. So that's a trade I could take. I will take anytime, any day of the week. No, what's happening? Make it bigger. Why did you do that? And it looks like it's gonna be a good trade. It isn't over till it's over, but probability of it dropping quick is low. Okay, so I got a divergence trade there. Two of my strategies kind of like confirming each other, confirming that it's going to be a buy trade for me, and that's it. I'm really glad we hooked one example. Let's see if we can maybe find another one. Nope. Oh, also on Ortgate here, I do have a high ADX here. Values there just like 29, so telling me that the upwards trend is strong. So if not win martingale, then how to trade in profitable? Okay, so I'm gonna am I right in saying that you're asking how can you be profitable if you're not using martingale, right? I don't use martingale when I'm trading options like this. I do I don't use it because it tends to lead to big losses on a bad day. Instead, what I've done is the strategies that I've put together, I know has a decent win rate if I stick to the rules. So um, I stick to one trade size for the day. This trade size is determined. I use a percentage of my actual balance, and then I take that. For example, let's say I've got $100 in my account. I'll take $10 from that account as what I call my starting balance. So I'll take $10 of that, and that $10 I then use to trade. Not $10 trades. I'll do if that's the ratio, I'll maybe do $2 trades. That's the way I do it. And I just keep for the rest of that day. Then I will keep doing $2 trades the way we just did. And like I said, some days I get most days I'll get one trade every 10 minutes. Some days I get one trade every 30 minutes or maybe every hour. And those days I stop trading and I go do something else because it frustrates me. And if I get frustrated, I start making mistakes. Did we get maybe lose something on euro? No, we didn't. Miss something. Okay. Okay, so I think I got all the questions. Did we cover? Abdul said, yes, the data release is 53 minutes now. I see you posted earlier 1 hour and 3 minutes. Yeah, it's 53 minutes from now. The US will be US session will begin 23 minutes from now. What is the best time for trading? The best time for trading is the one that you understand best. That suits you. That's the best time for trading. I enjoy 10-second charts. I enjoy doing watching 10-second charts and doing 1-minute trades. If you struggle with 10-second charts and you want to watch a 1-minute chart and do 5-minute trades, that's what you should do. If you want to watch 5-minute charts and you want to do 1 hour expiries, that's what you should do. You should do what is best for you. What's best for what I am comfortable with might not be comfortable for you. And you must be comfortable when you're trading. You absolutely must be comfortable when you're trading. Gilbert asking how long have I been trading? Gilbert, it's almost 25 years now. And I do this for a living. This is all I do. I don't do anything else. Oh, a couple of years. It was a couple of years, but I did not have when I started trading, YouTube wasn't that populated and it was difficult to get decent information on trading. So I was self-taught. I really didn't have anybody or any place where I could actually get some information, decent information, not nonsense. Most of the information out there, a lot of the information out there is a bunch of nonsense. But 10 years, about 10 years. But also to make it clear, I've been a full-time trader only for about 7 or 8 years now. So when I started, I was still working, and I didn't have the stress of, having to worry about being profitable. I took my time. There was times when I stopped trading due to work where I didn't have time, stuff like that. But I have been at this for almost 25 years now. Okay. Any questions regarding today's video, guys? Anything you want to know about assembling a strategy? We got anything? How do you understand advanced candle movement in one candle movement? Okay. Aminur, you will notice that I said when I was talking about the time frames, that I said if you're comfortable doing 10-second charts, doing 1 minute, watching 10-second charts, doing 1-minute trades, watching 1-minute charts, doing 5-minute trades, watching 5-minute trades, doing 1 hour. I have not found a way to extrapolate data from one candle. I have not seen anybody do this successfully. Um, which is why I'm trading 10-second charts because I'm doing 1 minute expiries. I need a few candles to get to extrapolate the data I need to determine if I should take my entries. The strategies I use though, you can use on a 1 minute chart, for example. You're going to get the same. You're going to get, let's see if we can find, there's a trade with in accordance with my RSI strategy, for example. That's a valid trade. But now what do? We're on a 1 minute chart, so what do? I take a 5 minute expiry. That's it. There's a very nice bearish divergence on the moving average, on the 200 moving average there. Bearish divergence showing me a drop is, we could see a drop. Both the RSI and the stochastic gave bearish divergence. What do? Take a 5 minute put. So extrapolating data from one candle, I wouldn't dare do it. I wouldn't claim to know how to do it, and I wouldn't. There's no way I would even attempt it, because I still haven't seen a way for it to be done. If I'm watching 1 minute charts, I will take 5 minute trades. If I do watching 10-second charts, I'll do 1 minute expiries. If I'm watching a 5 minute chart, I'll trade for an hour. 5 minutes will also be the same. We can still look. A lot of sideways movement there. Let's see if we can find a trend. There's a valid trade. There's a valid trade on. We're in a downwards movement. This is on a 5-minute chart. ADX is high, very high. So it's telling me that the current trend is strong, which is the downwards trend. We got the rejection there. We got the tap on the middle line, for example, and you could take it if you took a trade for 1 hour. That's 6 candles, if I'm not mistaken. On a 5-minute, no, that's 12 candles. So if you got in there, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12. Good trade. But I like to. Well, I use a few candles. I need a few candles. I haven't seen it. I haven't seen somebody use it successfully, taking data from one candle and determining what's going to happen or what is happening. Never seen it. Okay, tell about right rejection retest, wrong rejection retest. How to know in advance. I'm going to answer that for you in one quick sentence. It's impossible to predict the market. 100% impossible to predict the market. If you sit down and you look at the strategies that I use, and you can ask anybody that's any successful trader, their strategy will be something that shows them something that is happening in the market that they follow. That's easy to do. Once you understand that you can actually follow the market, it's quite a simple thing to do. It's not that complicated. Trying to predict the market, though, is going to lead to a bad time. Just follow it. And that's what all strategies should be. If you want to start using a certain strategy, a specific strategy or something, you have to, that's what your mindset should be. Does this show me something that's happening in the market? If you take the RSI strat, for example, it shows me something that is happening. I get them wrong often. I do get trades wrong. It doesn't always, none of these gives me 100% win rate. Understand that much. Nothing does. Absolutely nothing will give you 100% win rate. So it's just about probability. If price is moving downwards strongly, if there's a lot of momentum behind a move, chances are it's going to continue. It's more likely to continue than to suddenly just reverse. Usually, reversals will start giving you indications that the market is slowing down, and then it starts changing. But if we're in a strong downwards trend, it's likely to continue. Not always, though. There's a good chance it will, and that's what this is the reason I also only take trades with the RSI strat, for example, in very strong trending markets. If it's moving sideways like this, no trading. Not on that strategy anyway, because it could go either way. Okay. We did quite a long video today. Candlestick patterns. Okay. We're going to leave candlestick patterns for another day. I'm not going to get into candlestick patterns now. There's so much information on that. It's such a massive topic that how to confirm trade. I don't know how to tell you this other than see what's happening. If we look at rejection, suppose this is a wall, and I have a ball that can either bounce from the wall or go through the wall. When do I know which is going to happen? Think of it that way. When do you know what happened? When it goes through, it went through, and if it bounced, it bounced. That's your rejection and your confirmation. Did it bounce? Yes, it did. Just wait that extra candle. See if it bounces. Don't rush. Wait. Be patient. See if it bounces. If it bounces, it bounces. If it doesn't, it doesn't. There is no way. I can tell you now that it's likely, for example, that price will hit this this moving average a bit too soon. I do not know, however, whether it will reject or break through. There's no way of telling before it does. I have to wait to see if it does or if it doesn't. We can't say that before the time. Okay, so there's no way of me telling you the next candle will be green. There's no way. We can only rely on our strategies that gives us probabilities that we've tested. And the strategy stood the test of time, and we know how it performs. And that's a lot of work. That is a lot of work. But once that is done and you have your strategy, it becomes much more simple. No more stressing, no more emotions. Helps you keep cool while you're training. Okay, guys, I think we're gonna if there's no more questions on creating strategies, I think this is where we're gonna end the video today. Again, guys, please remember, if you use that code NICU70, you can get a 70% deposit bonus. That's valid until the 13th. So yeah, no more questions on strategies. Fantastic. Thank you so much for watching, guys. I'll see you guys next week. Trade safe, trade responsible, and good luck.